Welcome to the Day Ahead Report, and here we're looking at the S&P 500. And the last report we were looking at this little bounce off these lows here, and what we assumed that we were looking at a five-wave structure, an impulse wave to the upside. And as you know, if you get an impulse wave in the opposite direction of the market coming down in this case, then after five waves we get an A and a B and a C, and then we would be looking for further upside. So this is starting to move up here. This may get a little bit more complicated through here, but it seems sort of okay here. So what we'll be looking for is a little five-wave structure up to here somewhere, then a little ABC back, and then further to the upside. So in the S&P 500 case, we can expect a retest of the 1400 here. The move up through here at this stage, it can be an A wave, or it can be wave 1, so this would be wave 2 or B wave through here. So this would be either wave 3 or a C wave up through here. So that part we don't know. We know that we're looking for a low in the market and a push higher. So this may be it here. But always we need to trade what we see, and depending on the degree of structure that you're trading, then you would have your plan in that direction. So if you were thinking that it's going to go further, then we'd be looking obviously at wave 1 and wave 2. But for wave 3 here, we'd need to see a strong move up, and we'll be looking for wave 4 up there. So a stronger wave 3 up through here, nice and strong, but finding support on 1400 here. But otherwise, it will fail at this point here. So it just depends on the degree of structure, but either way, I think just trading to the 1400 and getting out would be the go. So yeah, look, the Dow's pretty much the same as well, as you can see here, and all the other markets will be doing pretty much the same as well. The DAX here. So the DAX is working with the 72 here, but this is working quite closely with this group 2 through here. The same thing as before as well, the little five waves up through here. If we have a look at the DAX in the bigger picture, so to speak, just bear with me here. This is the DAX on the daily chart here, and look, essentially it's working with 72 through here. That's how we're sort of seeing it, and it's got old highs through here. So you draw a trend line in through here, so it is going to get some sort of sell off through there. It's a daily chart going back years. So this particular pattern through here, it's like like many other markets, it does appear to be quite bearish through here, but at the same time we're considering this a corrective pattern, and we're looking for a low within this corrective pattern, which is a little bit haunting really, because it is moving down quite strong through here. But that's those first little five waves that we looked at through here would be it's a just a very small possibility that we've got that first that low in place. Of course, this five waves here can be just part of a corrective wave of 535 like that. We know that, but if support is found on the 72 here, for instance, well then and it needs to be a tested sort of support too. It needs to sort of come down and test it, so to speak. Then we've got something. We've got a possible trend to the upside, but we need to be mindful that what we're actually got here. We've got a trend down through here. So so the English market's pretty much the same as well. The S&P 500 is the same as well. The Nasdaq has always had a bit of a, as mentioned before, always had a bit of a tendency to lead bear markets, and as you can see here, it's leading quite strong through here. So it's moved down quite a long way through here. So that is a bit of a concern, and that does give bias to a bear market. So any rally here, would be watched closely. So yeah, okay, so the Australian market as well. We've been figuring this as being a corrective pattern at the 4,500 through here. It's been here for a while, as you know, but we're also looking for a low in there. So the other day when we're looking for the little 5 waves up that we noticed in the global markets, we figured we can still probably call this in as a wave 4 here, as long as this low stays in place here. But at the same time, we've got to trade what we see, and this group 2 here has been rejected, and now the 44.50 is being played out as resistance as well. So look, what we could say is that if the 45.50 becomes the support, well then that would be the first sign of some strength here now as well, because kind of see it testing lower, but support on here would be the first step on the positive sign. So you'd have to go with that. Any sort of price action that's going to come down through here is going to be really choppy and messy anyway. So because it's not only because it's group 1, it's just because there's been support way over yonder here from before as well. So there's a lot to be the buyers are there. So yeah. Anyway, it's we're certainly not in a trend. We're still in this big correction through here, and it's not the normal thing to do to trade in a corrective pattern across such a large number as such. Scalping, fine, sure, but there's no trend here to be had just yet, because there's not. The other thing is that the Australian dollar has always been a bit of a leader in things as well, and that's been the Australian dollar, the gold, the US dollar. They're the strong ones to the upside at the moment. The S&P 500, the euro, and so forth to the downside. But yesterday and the day before, we've seen the Australian dollar moving to the upside, and that's always been a bit of a leader for me. And other markets tend to move with that. So it's just the way it is, and it's just a helpful little guide. And as you know, the Australian dollar is pushing up nicely, and with a very good sort of wave count. So we might be just seeing the others, slow to get off their lows here, with 5 waves up, and an A and a B and a C coming back through here. So let's just see what sort of move that we get up here and what sort of volume comes into it through here. All right, let's have a look at commodities. Okay, the copper market here, my favourite, is that it's coming into this section down through here. So we're looking for a low to be in place down through here. We don't see a lot of evidence of that so far. Finding support on the 350 would be evidence of that. We've got to bounce off the 340 at the moment, and if we found support on the 345 that was mentioned, which is halfway between the 40 and the 50, then the bias would be to the upside there. So we can see that that's moved up a little bit lower. Let me just find that smaller chart through here. Okay, so this is so if we put a little horizontal line at the 45 through here, then we can see that the market's above that now. It really wanted to get up through there, so that's a positive thing. It'll come back and test that now. So yeah, look, it's this wave structure down through here is a little bit, it's not clean and tidy in a sense that that I can call this wave 5 in here as a low through here. But the first sign of strength I'd be looking for is that when I do see a bounce off something, I just normally wait to see what sort of strength it holds. And an easy way to do that is just working to the closest largest number, which is the 345, and it's trading above that. It needs to come down. That doesn't mean that it's got support. It needs to retest that and find that as support there, and that would be confirmation that there is strength in the market, and then you would need to be on that side of the fence, so to speak. With that as well, just looking at US BHP, it's still really sticking to the 72 here, hasn't it? It's not really, it hasn't dropped down and rejected it as such. It's still, just like copper did at 345, it kept sort of pushing up through there. So if we got our count right, then we should see this move higher through here. So still positive here. It hasn't rejected it. That's the main point through here. So material sector is looking okay. Of course, we'd need the US dollar to move to the downside. What we'd need to see is a breaking of the 81 here. While it's got support here, then this market is positive, and it really makes it difficult to be long in material sector. So a nice clean break of the 81 here would be the trigger to be long in the material sector. So that's something that you can observe along the way. The gold and silver, the trends to the upside are still positive. What I think I mentioned this the other day is that, or yesterday, is that we've got 5 waves up here. So in the reality, we can call that wave 1 or the A wave. If it's a corrective wave, it will be the A wave, the B wave, and the C wave here as such here and finished here. So if this moved down through here, then that would be a possibility that would be an A and a B and a C. Our bias is telling us that we're looking for a stronger move to the upside in terms of up for wave 1 and back for wave 2, and then this would be the next little structure moving to the upside as well, and that's the sort of direction we're heading. So realistically, even if this market came back in some sort of retracement level through here, then the 50-60% through here. So we wouldn't turn bearish unless the 1700 became the retested resistance and it was moved below the 50-60% retracement level. Gold tends to work with 50% quite well rather than the 61.8% thing, but both are quite valuable. In terms of the levels through here, the 1700 here, then we've got group 1, 10, 20 and 30. So a nice support on top of subgroup 1 here would see the price at the midpoint, the 50 here, where you'd expect some sort of reaction from here, coming back to the 1740, then a move above that, and then finding support there as well. So once you've got support on that, you can look to add to that. With this little sort of 5-wave structure here, it would be fine for this market to move back into 1720 here, the 72 number. But beyond that, then that would be a sign of weakness through there. So just see how it treats that if that's the case. But it's good when a market comes down, has a big correction here and then comes down and drops below the group 1 here, or any level drops below it. And then if it finds support back above it, then you've actually got something. But if it drops through it and then it retests and rejects it and it has it as resistance, then that you need to be on that side of the fence, so to speak. But I find that a spiking down is quite good, especially when it comes back up and finds support, and that would be your part of your setup to be long on that side of the market. And this would be the same for silver as well. The wave count here is a little bit cleaner for silver in terms that looking for a 5 waves up through here from the previous low, the move back down, 60-odd% down, and then nice little 5-wave structure to the upside here. So you can see that this move coming down here, and the one in gold as well, is part of the corrective process from this 5-wave structure through here. So that's all normal. In fact, that can pull back 61.8% of the length of that as well. But the 31 group 2 here has got the support here, and obviously psychological, this 32 has been also tested once as support, so there will be some demand there as well. But this spiking lower through here is a good thing, and then finding support wherever you begin to look at the market. So looking at the market next would be at the 32.50, the midpoint, developing support on that there. The supply's here, so you would only go in with a small amount here and looking to add once the supply became the support through there as well. Alrighty, let's have a look at the euro and the Australian dollar. Okay, the US dollar, it's, as mentioned before, it's got support on top of 81, and that is support. So until that's broken, then we're going to be seeing the euro push to the downside. So that's, it's a real line in the sand here, so use that. If the US dollar finds support on 81.10, then you know that the bias is still to the upside there. This move through here appears to be corrective through here, so I would expect a new high to be made up through here. So further, there's a bias for further upside here, and you'd need to be long on the US dollar on this side and short on the euro on that side. So if we have a look at the euro, see what that's up to. Yeah, look, basically this pattern that's sitting on 127 here is a corrective pattern. It's basically because it's got overlapping wave structures all the way through here. There's no clear impulse wave to the upside, so it is bearish. And in terms of being bearish, if while the US dollar is above 81, then you need to be on the short side of this market. If the US dollar finds support on 81.10, then you can add to this side, to the short side of this market as well. It would be nicer if this was actually under the 27 here, under the closest largest number rather than above it. But that said, then we can break the situation down further. We can say that this is group 1 here, 10, 20 and 30, while group 1 does not have support on top of group 1, on top of the 30, then the bias is to the downside, even though that we're sitting above, it has to be positive above the 127, but we know that this is corrective. We know that there's no support on top of group 1 here. And the next number we can use here, which is always handy, the 72, being below the 72 here now. It's just sort of failed to get that. So this is the first sort of retest in here that is locking that in there lower. So we can expect this lower we can expect a break through this line through here, the 127.10, as we'd see the 81.10 on the US dollar move to the upside. But we would see a bounce at the 127 here again and coming back up and retesting the 10 here, or maybe even the 20, I'm not sure. But you'd still need to be on the short side there. But the point is perhaps not to overtrade on the short side, but be on the short side with the view of the 127 here becoming the tested resistance. Trading in Group 1 always has a choppy price action because there's always large orders at 10, 20 and 30, and that's the problem with it. So anyway, you know the right side to be on. You just can't. It's not a place to overtrade on. The market moves quicker between 3 and 5 and 5 and 8 rather than 1, 2 and 3 through here. The Australian dollar, we were looking at this yesterday, and we were looking at this low coming into play here, and we figured there was 5 little waves through here, so we labelled this as the wave 1 and the wave 2. So I think yesterday we mentioned that it could possibly come down to the 72 area here before moving up, but look, it's moved up quite nicely through here, so this can be counted. This can be counted in a couple of ways here. This could actually be counted 5 waves to here, but I think it counts better as wave 1, wave 2, and wave 3, 4 and 5 here for the top of the third wave. The fourth wave would pull back to the 38.2 retracement level of the third wave from this point here, third wave, or to the fourth wave, 1 lesser degree. So it's acceptable for this market to come down to the 104.10 before it moves higher. As long as it stays really above the 104 there, everything's pretty rosy. And the next thing you'll be looking for is support on the 104.30 through there. And as I mentioned, the US dollar, the Australian dollar, and gold, in terms of market correlation, are moving together. The S&P, the euro, and so forth have got correlations to the downside, but we expect all those to pull back in line. We expect the S&P 500 and the euro is going to be lagging, but the S&P 500 should move back in line with the Australian dollar, and so they all should pull back in line. So we're still expecting this to move higher, and what we're looking for here is support off the 104.30, the top of Group 1. Tried to do it over here, it couldn't do it. Trading above is not support. It's got to be, the breakout's important, but the retest is more important. So that's what we're looking for here at the moment. We're looking for a correction as a wave 4. we're looking for we're looking for support, and it's good when it drops below. I like that, and then find support back up here. Then you know that it's tested lower. Like there's there's buyers there. So it just makes it sort of easier. So we can expect that to move higher through there. So that's really about it. And also, this is the Australian dollar can be a very good leading indicator. So taking that on board as well. So it is leading the way to the upside and was first out of the gate. So if there's going to be any turn down, well, then that will help us with the S&P 500 and Dow and so forth, looking at those moves up as either larger impulse waves or as corrective waves to the upside. So the Australian dollar should help us with that move there. Alrighty, well that's it. So good morning and good luck.